Melissa, Twitter exec Ned Siegel trying to ride to the rescue, stepping in today and looking to limit the damage here. The stock falling nearly 10% today at the low, but then paring losses after the CFO clarified the company's actions, saying most accounts we remove are not included in our reported metrics as they have not been active on the platform for 30 days or more, or we catch them at sign up and they are never counted. He goes on to say if we removed 70 million accounts from our reported metrics, you would hear directly from us. Now, this is all in response to that Washington Post report that Twitter has been suspending more than 1 million accounts a day in recent months. And here was the part that spooked the street. The paper, citing an unnamed source, says the takedown could impact user metrics for the second quarter. CFRA's Scott Kessler downgraded the stock to a sell. He tells me he downgraded on valuation, but this report reminds us, he says, about risks for the company. He says a lot of the good news is already reflected in the stock, which is up more than 80% so far this year. Investors will have a better sense of what this all really means for the company when Twitter next reports results on July 27th. Melissa, back to you.
All right, Josh, thanks. Josh Lipton in San Francisco. So is a purge good or is it bad for Twitter? Seaberg, what do you say?
Look, I mean, I don't like Twitter. Let's just put it out there on the table, especially this valuation. As far as this purge is concerned, 20% of their user base seems incredibly extreme to me. So I think they publish it's less than 5% that are fake accounts, and that's probably accurate. I think losing 70 million, if you will, subscribers would be a devastating thing for the stock, and advertisers would basically pull right off the platform. I do think the stock's expensive here. I do think that there are better alternatives for investors, and I think that'll come out in the quarter. But ultimately, I look at it and say, this stock to lose 70 million subscribers, that's a big number.
70, but it won't appear in any of the metrics. What was interesting, though, when the CFO tweeted that, was that we saw the stock pare its losses, but it didn't recoup a lot of the losses suffered during the day. So there is still a grain of skepticism or concern embedded in the stock that go beyond these fake accounts that won't even hit the metrics, according to the CFO.
Look, they've got more than 336 million users, and I think that, a lot of these accounts have been dormant for more than 30 days. I think people, let's wait for the numbers on the 27th that the CFO is pushing people towards. I think that's the right thing to do. Ultimately, I think the stock's had a massive run, but just remember the sell-off in Twitter, also that we saw around the Facebook news, whatever you want to call the Facebook situation. Bottom line is, it's the same story at play here. You've got two companies where they are trying very hard to get control of their user base and their data, and I actually think it's a positive.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.